Hey guys. So what I'm going to do is I'm going to start doing videos, I think, instead of writing text updates because it's really difficult to give you an idea of and connect the spreadsheet to particular market action when I'm just writing it out and using text instead of giving you an explanation of what's happening in the spreadsheet as compared to what's happening actually in the market. And so without using charts are handy. The spreadsheet gives us an idea of what the accumulation and distribution of insiders is doing. But I think it's important to take a look at charts in order to have context about what we're doing with the spreadsheets. So let me bring up the spreadsheet and then we'll go over to the charts for a second because what I'm going to do is I'm going to start doing daily videos. I used to do daily videos, but it took a very long time to edit. So these are not going to be edited at all. Just to save time so that I can get this information to you and it's less drain and strain on what I need to do. I don't have to hand it over to an editor. I don't have to hand it over to a sound guy. I'm just basically doing these on my laptop. So that's what you're going to get. Totally unedited, raw videos. Okay? So if I make any mistakes and I have to cough or sneeze or whatever, you're going to get it all. It is what it is, and we'll just go from there. All right, so here's the spreadsheet the way it looks right now. Basically on Friday, we're up 39 points, but remember, during the day, we were up a lot more than that. We're up close to, I think it was like 150 points or so. Let me just go check here. I have a couple different charts up here. This is my live trading account. Now, I can't actually show you entering orders in my live trading account, unfortunately, because I did that with my trading as a business videos, and I got a call from Thinkorswim because they said, please do not show the commission you're paying because my commission rate is so much lower than any other traders because I trade so much. They given me preferential treatment, and they said not to show my commissions. So unfortunately, I can't show my trades as I do them as I enter them. But I will be recording some of the trades I do for my live account, as long as I don't show you the commissions that I'm paying. So you can look forward to that in the future. During the day, I'm going to actually do some live trading. So here's where we are right now. Now I'm on a 1 hour chart. Let me go to a 4 hour chart. And you can see that we take a look at Friday, and I'll go back to the 14th here. So right here was the open. And that is, let me go down to a 1 hour. So here's basically, New York midnight right here. The market swung down a little bit and then rallied higher. So if we take a look at the previous day's close, which is here, we were right about at the 1810, 1814 level. And so at the height here, at the top of the market on Friday, we were at 18,177. So we're up close to 160 points on the Dow Industrial Average. This is the YM. So it's a little bit different than the cash index, but obviously we're in pretty good shape. Now, I don't do Fibonacci's like everybody else. I'm going to show you in another video how I set up my trade screen. But anyway, we're up 177 points, or about 160 points. And then we started selling off immediately. I had a little target. I did a little trade on Friday. I had doctor's appointments on Friday, so I couldn't trade that much. But unfortunately, this is the area that I really wanted to go short, right around the 144 level. My target was here at 18,038. The low here was 18,041, so it was off by a couple of ticks. But I did make money. I got in right around the 1881 level and rode it down to the 1840 level. So I did make some money on Friday, but I did not tweet that because it was such a short-term trade. I really expected it to last less than 10 minutes, and it's really tough for you guys. I know if you're gonna, look at those tweets and say, well, gee, it's gonna be 10 minutes long, then, I need to either be in the market or I need to watch it every second, because if I tweet 10 minutes later saying I'm out, I don't think it really does you a service at all. And also, it's very difficult for me to watch a trade while I'm watch the tweets while I'm trading and enter a tweet. And so if I think the trade is going to last longer than an hour or 30 minutes, then I'll tweet it. If not, I'm just going to do a short-term trade. In any case, now let's go to a daily chart. I'm also going to show you how I set up. Like I said, I'm going to show you how to set up my screen. How I set up my screen. Let's go to this daily here on the SPY. Let's go to. They don't use that on here. I have to go to. On the profit charts, I have to use INDU for this. All right, let me pop this out, and I'll make it bigger. So if we take a look at the spreadsheet, let's take a look at it going back to the beginning of September, maybe the middle of August. Right in here, we hit our top. We really hit the top on August 15th. So let's take a look at the spreadsheet going back to August 15th here. We marked it off as a potential top, but we still had a little bit of price action that indicated that the market was still going higher, but you can see that we had a number of crossovers here. So right after the 15th, when we're looking up in here, you can see that, right over here, right on the 15th, we had a few days in which the market was still crossing over. We had some crossovers. That means that the 5-day moving average on the up DNA is crossing over the 3-day moving average on the up DNA. And so we had a number of crossovers. In fact, if we go back, it shows, the crossover started on the 9th, 10th, 11th, 12th, skipped the 15th, but then we started up again on the 16th, 17th, and 18th. So we had a number of crossovers here, giving us an idea that there was, in fact, a potential top in the market. We also had some huge numbers up here. The distribution alone on the 11th and the 15th would have given us pause to the market, showing that, in fact, right in here, there was a tremendous amount of distribution going on. That means that insiders were selling stocks to retail traders, investors, money managers, professional traders, just about anybody who's in the market looking to allocate money in stocks. They're going to be they looked at this and it showed a tremendous amount of distribution. And that's why we started to tail off. We started to come down in the market. We hit a little intermediate term low here from this level, which was about, let me see if I can zoom in here. It was this level right here. High was 18,668, and we hit a low of about 18,000. So we came down about 600 and almost 700 points here from the 15th, and that's when we had these two huge distribution days. And then after that, we started to get some selling. So, for example, on the 22nd, we hit a 20, and the 24th, we hit 13, which gave us an indication that, there's accumulation by insiders. In this case, they're buying stocks, or at least they're covering their short positions that they established here. And now they're accumulating, or at least covering their short positions. They may not be accumulating for their long-term accounts, but they will. But at these levels, if these accumulation levels are at least covering their shorts and buying back the stock that they were short, It still doesn't give us an indication that there's a tremendous amount of buying here, but it does give us an indication that maybe the market will stop declining, and that was on the 24th. So if we take a look at the 24th here, where are we? And then what month am I on? Yeah, but it shows intent. So here's on the 24th, it shows intent here that the market really wants to come down. So there was some accumulation. We had a little upturn here, and then it started coming down, and there was a lot of distribution in here. But then we pretty much, we declined a little bit here on the 26th. Let's see what we did on the 26th. A little bit of accumulation, down 53 points. It's not huge. But then we kind of basically went sideways to a little bit higher right here. This is where the market started to turn again, and that was on September 6th. So if we take a look at September 6th, you can see that whole period, the 2nd, the 6th, the 7th, and the 8th, huge amount of distribution, which terminated on the 12th. So there was a whole block here of a large amount of distribution. So it appears, and it was confirmed by the spreadsheet, that there was a large amount of distribution going on here, and that we should expect a market decline, very sharp market decline from September 2nd to the 8th and the 12th. So let's go back here, go to September 2nd. Here's the 2nd, the 6th, 7th, 8th, and then boom, the market just dropped off. So these 4 days here had a tremendous amount of distribution that doesn't show up on the chart. You really don't see it on the chart. You don't even see it in the volume figures down here, but the spreadsheet will pick that up, and that's why we were expecting a market decline at that point, because of the large amount of distribution. Now, when we got down to these lows after, this was Brexit, then we had a tremendous down day on the 9th, bounced a little bit on the 12th, came back down on the 13th. We're down in here. Now we had a huge amount of accumulation because of Brexit here. So the 13th and the 14th was a huge amount of accumulation. And so the market came down. We didn't get huge volume until here, which was the 16th. And that was a day that they accumulated a good amount of stock as well. So Brexit was in here, and then we had this, kind of back and forth, basically offsetting each other. We're up 177 one day, we're down 88 points the other day. Basically flat to even here. And then since then, even though we have declined somewhat since the 20th, well, let's go to the 22nd, 21st and 22nd. We see very little distribution here until the 28th. We get a pretty big number. And then on October 5th, we get a pretty big number, the 15th. There's a little bit of accumulation starting here, but more distribution on this side. So on October 5th and the 28th, you could say those are the two big distribution days, and the 30th in the middle. Let's take a look at those, 28th and the 5th. Uh, 28th was right here, big up day, pretty much marked pretty close to the top, except for this one here, which was on October 10th. October 5th was a pretty big distribution day. And then let's see what happened on the 10th here. And on the 10th, we had very little distribution, which means that at that point, it was a fake out. It was a total fake out. Insiders weren't interested in distributing stocks at all here. They took it up. They could not. They broke out above these highs to run whatever stops were just above this from anybody who was interested in buying on a breakout, and then totally reversed it to bring the market down, and that's how insiders typically do it. So now on Friday we had an accumulation of 7, which is not huge, but the last accumulation of 7 that we had back here when the market dropped 195 points, we had a 164 point advance the very next day. So it's going to be interesting to see on Monday if this little bit of accumulation that they had on the 13th and 14th continues the rally. So even though we were up 160 points, we declined really 130 points to get down to this 39-point advance that we had. And I indicated on the 13th that the market was going to go down. The market should decline, but probably after a little bit of an advance here. And that's exactly what we had. The market advanced higher, but then declined. Now, if as I mentioned, the market is looking for volume, I don't think it's found it yet. The market makers are looking for volume. They want to accumulate additional stock. I don't think this is going to be enough to support a very large rally, but it's quite possible that they could. But we've had 1, 2, 3, 4 days now in which the market has done no distribution and very little accumulation. So my analysis of this market action is that they're looking for volume someplace, and it's most likely going to be to the downside. Now, this day in particular, on the 11th, when we were down 200 points, we only had 1 point of accumulation for that day, and that is an anomaly. That is very unusual. A 200-point decline typically would come in at least a 7 like this, which means that there's no resistance to a decline. So insiders can take the market down and accumulate very little stock, which is exactly what they want, because they don't want to have to carry stock down to lower levels that they had to buy at higher levels. They want to take the market down to lower levels so they can accumulate as much stock as possible. And that's why, even though this is a 7 on the accumulation side on Friday, I don't think that is going to end the decline. I think the decline is going to continue. I think we're going to still get lower prices in the market until they do find a decline. And the most logical place for them to decline to is down through some old lows. So let me just zoom out here for a second. And some of those old lows are all the way down here to 17,100, way down here where Brexit was going back. So initially, I believe we've got a couple of areas of potential support. Of course, 18,000 looks like it's already setting up as a potential support area. But if they drop down through again, which they've already done, they've dropped down through 18 and then started railing back up. I believe that even if they rally higher here from here, the ultimate goal is to bring it down to the 17,100 level and just maybe slightly below that, right into the 17,000 level. So that's, I mean, just based on what I know from insiders is that they're looking to accumulate stocks at lower levels. They've already distributed what looks like a good amount of stock at the level at 18,600. And so if I'm correct here, they're looking at accumulating stocks at much, much lower levels. All of the other columns here indicate that, with price volatility is only 19%. It's kind of weak, actually. We had a peak here at 56% going back on the 5th. But it just appears that they are interested in accumulating stocks. They haven't done it yet. They haven't accumulated very much. And in order to accumulate it, they're going to start taking prices lower. Doesn't mean it's a straight drop down. We're probably going to have a lot of zigzags, a lot of ups and downs. But I think we're going to get to the point where, like here, like up in here, They distributed stocks and then took them lower. They accumulated some. I think they had a couple of days here which they raised prices pretty sharply. They distributed the stocks that they accumulated here, and now they're ready to start taking the market lower again. All right, guys, that's it for today. We're going to take a look at. We'll keep an eye on the market, but I'll also show you how to set up my charts here. So basically, let me expand this. Somebody asked me this before. They wanted to know how I set up the advanced decline volume. The formula for that is pretty simple. It's just $ UVOL, a minus sign, $ DVOL. And so if you enter that into the flexible grid on TOS or this charts here, so we can just go like this. You just type it in $ UVOL, minus sign, $ DVOL, you will get the advanced declines. Typically, on my charts, I put this on a 15-minute just to keep an eye, and I also draw a line on the 0 line so I know if they're going higher or lower over the 0 line. And then the advanced decline issues is ADVN, $ADVN minus $DECN. So in my setup here, now I'm on my laptop, so these look really, really small, but if I'm on my desktop, they look a lot better. I'll keep these down in the lower corners while I'm looking at some of my these are not fib levels. These are different kinds of levels that I use, but I modify the Fibonacci retracement level to my own system for trading on a short-term basis, and that's what I'm using here. So, when you're trading the YM, just make sure that you're using the most current contract. This YM Z6 is for December expiration, so you want to always be on the most current contract and watch for the changeover when they start trading new contracts. You want to roll those positions over. But anyway, this is the market now coming up for this week. Let's see, I don't need these anymore. Coming up for this week, what I'm looking at is a possible drop down into maybe this level right in here, 17,983, which is one level I'm looking at, and potentially we go back up to 18,145. So we could see a little bit of a drop here, maybe another push towards that 18,145 level. It depends on whether or not insiders want to accumulate stocks on Monday or distribute stocks. If they want to distribute stocks, they're going to take it right back up to that 18,145 level and then start to drop again. So it all depends on what we do Monday morning. I would be surprised if they started railing stocks after such a small distribution, but it's possible, or a small accumulation rather, that we got on Friday. If they do rally it a little bit on Monday morning, then expect maybe a rally up to the 18,081 level, which is only about 30 points from where we closed on the YM anyway, and then a sharp move lower, probably below the 17,983 level. That's my setup for Monday's trading, at least. All right, guys, that's it for today. Go out there and trade with confidence.